Amazing. Well, good afternoon, everybody. I think this is the last panel of the day, so we got to make it really exciting. We'll start off with some introductions. My name is Nikita Sachdev. I'm the CEO and founder of Luna PR. We're a PR agency headquartered in Dubai with offices in New York and London. Been in the space since 2017, started my crypto career with Huobi Exchange, now HTX in Singapore, and now in Dubai. Over to you guys.
Hi, I'm Erkan. I'm the CEO of Abex. We specialize in advanced trading algorithms, and basically that's our specialty. Thank you.
Awesome. Hello, everyone. I'm David. I spent about 11 years in TradFi as a quant. I jumped into crypto in 2015 because I found out the exchanges were giving away free data. I ran a fund in the space from 15 to 20. I then joined FalconX to help build out the institutional premise within the crypto industry. Was there for about 5 years. And I just jumped over to Clear Street, which is a TradFi prime broker that's jumping into the crypto space.
Hi, everyone. Chris Tyra. I'm president of Bullish Exchange. We're an institutionally focused digital asset exchange, globally regulated. We do about $3 billion a day, which in practical terms means that we do more spot Bitcoin, more spot ETH than Coinbase. We went public last year on the New York Stock Exchange. Nice to be here.
Hi, I'm Moses, and I represent Anchorage Digital in APAC region. So Anchorage Digital is a crypto-native platform purpose-built for institutions to participate in digital assets. We operate as a federally chartered bank in the United States and also operate in Singapore as a major payment institution. Our services include custody, trading, settlements, as well as on-chain services such as staking and governance. We also recently started to become a stablecoin issuer, and as many of you may have heard, we have also partnered with Tether as the issuer of USAT in the United States. Thank you.
That's amazing. Some fantastic panelists, and I'm guessing you guys have been in this space for quite a while. Today's panel is about after the hype, what stayed, what's next. And it's an interesting moment in time. This past 1 year, we've seen a massive shift towards the US with Trump coming in, legislation being a little bit more friendlier towards crypto. We've seen companies go public. We've seen digital asset treasuries, the rise of stablecoins, and RWA, of course, the buzzword. What narratives will continue from here? What is actually here to stay, and what is hype?
I'll jump first. So, I mean, I think there's a couple of things, right? Like, the number one thing that I would cite is a few years ago, we were asking when the institutions are coming, and now it's about how do we scale all these crypto businesses and unify it with TradFi. And I think if we had to boil that down, you've got about like a year ago, October 24th or 2024, you had about 4% of Bitcoin wrapped up in TradFi-related products. That scaled to about 11% of the outstanding float. And about 30-ish% of spot Bitcoin is traded in TradFi and related assets. And so you're seeing this massive convergence. I think one of the benefits of that is that the institutions are here and they're actively participating in the market. And even though that we've got this like 45-50% drawdown from the peak in crypto pricing, the interest overall remains relatively elevated, even if the price action isn't showing it. And so I think a lot of the conversations that I have is like a crypto native portfolio manager a year and a half ago was only trading digital assets, or they were trading derivatives of digital assets. But now they've got a healthy chunk of their portfolio in assets that are more akin to TradFi, like equities and DATs, mining stocks and things of that nature. And so you're absolutely kind of seeing this convergence take place right in front of our eyes. And for those of us that have been kind of in the crypto space for a long time, building on the institutional side, this is kind of the moment that we've been waiting for. And now it's time to really execute and scale.
Yeah, I would split it into a couple of different categories. I'd say that there's there's what's kind of already here and has proven itself. I'd say really only kind of like Bitcoin fits into that. Bitcoin's on its way to realizing its terminal value as a digital monetary commodity. I don't think there's anybody that, the kind of, Bitcoin is going to zero. I think like there's very, very few people around that sort of still believe that. Then there's next like ready for prime time. And I'd say that, you could put stablecoins there, $300 billion AUM or market cap. That's, I think that's about to explode even more so than it has already. And look, really stablecoins were the first successful use case of tokenization. People have been talking about tokenization for 10 plus years. It's taken a very long time, even though people could look at the rails and say, hey, this is just a more efficient way of issuing, trading, settling, reconciling, all assets or all contracts. Really it took, stablecoins to kind of prove it out and get to the scale that it has to demonstrate the value of the use case, so on and so forth. And now we're just seeing everything else come in. So I think that, trivially we'll see, all asset classes experiment with tokenization from FX to private equity, private credit, so on and so forth. So I think that, and then there's kind of everything else. And I'd put kind of like Web3 and, all that stuff in there as well. TBD on whether that kind of survives and whether there's a persistent use case and persistent interest. But I'd sort of categorize it in those terms.
And sorry, what do you mean by that? Like in terms of like NFTs, metaverse, is that what
I
you're
just think there's a lot of stuff, like we've been through DeFi summer, NFT summer, we've been through, there's a lot of historic narratives. Like I think DeFi has proven itself out, but now is that going to get strangled by, controlling the on and off ramps? The market structure bill is debating DeFi as we speak. That has the potential to, really throw the brakes on, some of the innovation and some of the growth there. So yeah, I think that it's yet to be proven. It hasn't found product market fit. DeFi is slightly different. Like you look at Hype and Aster and so on and so forth. I mean, they're trading massive volume. NFTs are a good example though. Like, I think that's a really interesting space, but it hasn't really lifted off and hit sort of mainstream public adoption as yet. And I think there's a question mark as to whether it ever really does.
Yeah, I like what you said about product market fit. I think that's very important. It reminded me of, I live in Dubai, and the Dubai police has actually integrated NFTs for stolen passports. And I think there's some case studies like title deeds and passports that are really good case studies for NFTs. But I think maybe it was just the wrong products being put into market and very hype focused. But sorry, Moses and Erkan are curious to hear your thoughts on the what's surviving this market.
Yeah, I think I'm like the particular thing I observe is the derivatives market is here to stay. Basically, the more the activity is shifting from the spot and small coins into big coins and like Bitcoin, and then from there it moves into the derivative space, and then from there it moves into the more advanced derivative space, and that is a great indicator for the institutional needs and how the product space is evolving. So for me, it's a clear path towards moving into this shape. So more retail-driven products are becoming less interesting overall. The other thing that I see, that there is a smaller correlation between the products that are the projects that are building particularly interesting pieces in the space versus how much they're actually trading or what the value of that token is. So that's another interesting thing, which means that the survivability of these projects are not necessarily backed by the trading activity, and then you have a question there. So there's a lot of unknowns in front of us on what's going to survive, what's not going to survive.
And Erkan, I'm curious, do you think that's a good thing for the space, that there's less retail interest from what you're saying, or less interest in retail products and more institutional?
Good question. I think retail drives the individual's needs, which are often less sophisticated than the institutionals. Institutions tend to drive the more advanced product models, more advanced shapes, more structures. And in the retail, you're often looking to get the most out of your money by leveraging the highest and more of a bid on, sparse bids. So institutional volume will push us towards the more advanced product space, I believe.
And with institution also comes more institutional adoption, comes a little bit more regulation, regulated structures. And the crypto space was initially built on peer-to-peer, decentralized. It was meant to be more retail focused, in my opinion. So how do you think these, both the institutional and retail parts will come together? Do you think the pendulum will swing more towards the institutional side, or do you foresee a good balance in the future?
I think the regulation itself is finding its feet on what to regulate and what to not regulate too strongly. I think it's caused some of the firms to, be kicked out of countries and move into other countries, and so the crypto industry is still shifting around, finding the right regulatory space to operate for its needs. We believe in regulatory regulation to improve the space very much. So we have just achieved our FCA full authorization, which allows us to do derivatives as agency, which is a fully authorized activity in the UK, as well as we have
Congrats.
Sorry?
That's a huge deal. Congrats.
Thank you very much. I appreciate it. As well as we have the FCA crypto license, which allows us to do principal trading, custody, and on-off ramping. So we're fully aligned with the regulatory side, because we believe that allows you to operate in a more safe and innovation within a framework where it's safe for everyone and more institutional welcoming.
Thank you, Moses. I'm curious to hear your thoughts.
First of all, hate to say that the hype is over. I think the hype is maybe a little bit more subdued, but definitely there's different focuses now. So, for example, we've spent maybe 3-4 years working on block space, block availability. I think people forget that maybe 3 years ago, we kind of couldn't imagine a world where there was enough block space readily available and cheap enough to actually use. And so that has largely been addressed. And so now we are able to actually scale with use cases like DEXs that have been tremendously successful with Hyperliquid and so forth, as well as stablecoins. So you could not use stablecoins the way we are planning and using stablecoins outside of trading without that kind of infrastructure that's been built over the past 3 years. So what's more important now is how we use the block space, not like building additional infrastructure for the block space. So that is something that will continue to be an enormous focus. So what is the product market fit outside of trading and remittances and payments? Those will be very interesting going forward.
And when we look at the next coming years, a lot of people talk about the quantum threat. They talk about AI being a threat to crypto, or even a change in the political party in the U.S., maybe backtracking regulation. So, do you see these parts as risks, and what else do you see as a risk to crypto in the future?
So regulation is super important. Without regulation, institutions will not participate in crypto. So that is a fact. So for example, banks, they are still limited from full participation in public blockchains due to BIS regulations on capital requirements. So regulations, step by step, it's being implemented in different countries with different types of regulation. And as you said, politics matters a lot. Anchorage Digital was the first federally chartered bank 5 years ago. And that was put on pause as far as bank license issuance for crypto companies, largely due to the political environment. And then you found that last month there were many bank licenses issued in the US. So definitely politics matters, regulation matters, and regulation, really is the key for successful entrance in the institutional space.
I think that some of this is, there's definitely been gasoline poured on the fire of the industry in the U.S. just with the Trump administration and the focus that they've had on it. I mean, it was the #1 policy priority, with Trump incoming. That said, like I don't. So look, if he's, he's got, this is his last term, and after that, if there's a Dem candidate in the White House, then things could reverse course. How much are they going to reverse course? Like, I think that, the Overton window is now shut. I don't think that Liz Warren and, her anti-crypto army have the same kind of sway that they did. That said, you look at, if the Dems really wanted to take retribution on Trump, what would be the easiest thing to do? Go after some of the kind of crypto wealth that he and his family have built. So I think that we could see, some slowdown, some reversal. And so these things definitely hold risk. But what I would say is that, it's kind of interesting to me because, if you rewind, the price action of crypto right now and the sentiment around tokenization just could not be more different. So I think that, whilst we've seen, we're in the middle of a sort of 50% drawdown in Bitcoin and, maybe there's more to go. The flip side is that, on the tokenization front, I mean, you look at like the sort of ADV of non-RWA tokenized assets, in Jan 25, we were trading $32 million. Jan 26, we traded 1.2 billion. So there's this kind of like, I think awakening that everybody's come to terms with the fact that, everything's going on chain. And there couldn't be more divergence between, the current market sentiment around crypto native assets and then the direction of travel as it pertains to financial market infrastructure. And so that's a genie that you're not going to put back in the bottle.
I'd agree with that. I think, as I mentioned before, the infrastructure is now robust enough to build on. And so the most important thing that many people forget is that with public blockchains, you have one source of truth. And that is a huge technological difference than what is happening in the TradFi space, where, like, for example, in a TradFi space, if you had to send an international wire from one country to another, then it's almost like riding a train and stopping in many stops. Whereas with public blockchains, you don't have those kind of rails. It's like an airplane and going point to point. So it's now very apparent that we are dealing with a superior technology, and obviously regulation matters. The sad thing is that better technology doesn't always win. So I'd say TradFi will also get better. So it's upon us to keep on pushing.
Okay, so Moses, when we're talking about, you're saying that it's not always like the best technology doesn't win. What infrastructure will win? There's so many chains out there. There's so many L1s. People are then building L2s. And sometimes they're adding a bit of a layer of complication. Like, we're all trying to strive for mass adoption. We're trying to keep the technology as simple for the mainstream to understand. Which infrastructure wins? Which chain do these RWAs build on? Which stablecoins do people use?
So with blockchains, network effect is something that is massive. Public blockchain, it follows the internet rule. And so network effect is something that needs to be supported by the underlying technology as well. And the technology also needs to continue to improve. The other thing I would mention is that, yes, block space is now more available and cheap, but then there are other problems that have not been fully addressed, such as privacy.
Yeah, and I'd say the actual chain of which one wins is like, that's a developer question of like what makes more sense, and those guys are much smarter than I at that world, right? But what I would say is like crypto still kind of needs its moment where it becomes easy for the everyday user to access crypto, right? And so a lot of institutions, a lot of retail apps are focusing on basically how do we kind of mask away some of the complicated things like you were mentioning, right? Like once upon a time, you put money into Coinbase, you convert your dollars into USDC, you move it into your MetaMask wallet. Now you can trade in DeFi. Then you want to lend it or stake it or generate yield in some fashion. Those are a lot of steps to keep track of, right? And there's not one centralized view. And so for me, I think like the underlying chain, the ones that get the network adoption and the ones that builders want to build on top of are the ones that are going to win. And I don't really have a fighting horse in that race. But I will say, I think that crypto needs a UI upgrade, and a lot of folks on the institutional and retail side are working on doing that right now.
I'll kind of add to that. I think one of the reasons why we would say that the hype is over is because I think we've reached a certain point where we've gotten enough friction where we've already onboarded the retail users, the individuals that are willing and able to manage their own private key. Most of the world will not do that. And that's why institutions coming into the digital asset space will improve the UX. And then what kind of chain is used will actually be more influenced by the institutions going forward.
I think we've definitely gone past the, tell me how this works, and now people want to see, show me how this works. Like, it's definitely, nobody, the world doesn't need another L1. What we need is proper utility. And look, the market structure bill has the concept of a mature blockchain, capital M, capital B. So if you're the SEC, are you going to give authorization for a company to issue a tokenized financial instrument on a brand new L1? Like, I think the answer is candidly no. And so what we're going to see I think, a convergence around some of the very well established and heavily understood and broadly accepted L1s, and we're going to see I think we'll see a sort of real selection process go on. So I would imagine that we see a lot of L1s become redundant over the next kind of 5 years.
Yep, that makes sense. I think for me, we've definitely achieved that crypto is here to stay aspect, and the second part is stablecoins have become a lot more commonly used, and it's become more transparent than SWIFT system in its operation, which is incredible, much faster, more transparent. I think I'm most excited about the tokenization, because I think in the tokenization has the aspect of completely swallowing up the traditional finance and into crypto, and that means everything that is in traditional finance will be replicated in the crypto space over those tokenized assets. And that's very exciting, because there's a whole world of new financial system to build by us, basically.
Yeah, I think on the back of that too, like one of the themes that I don't think that people are really talking about a lot in the space right now are like on-chain asset managers, right? So because you have the growth, particularly of like yield-based products in the crypto space, now you have folks that are creating actively managed on-chain financial products for people to invest in. To carry through. And so like if crypto yield from like a basis perspective is better than the rates that you can get in TradFi, then you're going to allocate your portfolio there. But if it's TradFi yield, which generally speaking is kind of where we're at today, then you'll make an adjustment and allocate more that way, right? But I think like the concept is fairly new. There's a handful of folks that are working on doing it. It hasn't attracted a lot of assets under management. But to your point, I think this is probably one of the key themes that we're going to continue to see. And you kind of have this convergex where you're taking crypto and you're wrapping it in TradFi products like an ETF, and then you're tokenizing things and you're bringing it on chain, right? And so you're from both directions, you're swimming upstream, you're swimming downstream, but you're getting that convergex in the middle, and a lot of it is related to financial products and asset management.
And Erkan, you touched base on this kind of crypto or tokenization completely swallowing up TradFi. Is that the end goal for tokenization to come in and completely revolutionize the traditional finance ways, or do you feel like we're going to have a bit of a mutual ecosystem?
I think completely, like 100%, would take a very long time. But there's a practical point where you say, okay, the dominant is the crypto world. I think that's relatively within, I would imagine it to be 7 to 10 years range that we would completely swallow up the traditional finance, because you can see the biggest firms already in the space. What I didn't know is the largest firms, that largest asset managers, have been mining Bitcoin since 2014 silently. And that was quite a surprise when I found out about that. And
Are you talking about Fidelity?
yes, I didn't want to name it, but yes, that was quite a surprise that they've been mining. And BlackRock is involved in tokenization. You've got the JP Morgan is creating payment rails over its own blockchain, but these own blockchain has already been done and dusted, and it's like, okay, you're going to have a chain here, you're going to have a chain here. There's going to be something that talks between the two languages, and suddenly it's all everywhere, right? So I think these are the steps we will see over time that allows us to converge into the blockchain world, and with the tokenization, with the replication, with asset managers on chain, with companies that are one side on the traditional finance, the other leg on the crypto side, will allow the replication to happen. And as such, we will migrate towards this world, because it's more transparent, it's more trackable. It's kind of what the government will want as well because of its transparency. So there's a path that it flows through it.
I guess it depends what you mean by coexistence. Like if you mean, hey, look, we had all these companies that were super successful on the old traditional rails like NASDAQ and New York Stock Exchange and so on and so forth. But, here the crypto guys come and they're just going to take everything over. Like, I don't think that's going to happen. Like, I think if what you're talking, so like, there's no way that those guys are just going to lie down and let somebody, well, it was fun while it lasted, and just let, Coinbase and Robinhood come and eat their lunch. Like, I think that there's definitely going to be, the New York Stock Exchange announced that they were going to go 24/7, which I think, now, one of the interesting things is that crypto has demonstrated that you can, run an exchange 24/7, 365 with minimal downtime. That's not something that people thought was really possible. It was all kind of batch processing and taken down for maintenance and weekend closes and so on and so forth. So I think that, just in terms of infrastructure, I think that the infrastructure itself is going to be adopted. I think that, how we, issue and trade financial instruments will definitely change. But a lot of the big legacy companies are going to maintain, they're going to adopt the technology as opposed to be replaced themselves. I mean, I think one of the interesting things is kind of figuring out, what happens with stablecoins. We think about this a lot, and when you think about it, a stablecoin it's whether the analogy is stablecoin cash, or is it a settlement product? And because within, let's say, within the US, with all these kind of payment apps, you can settle 24/7, 365 between each other. It's not full and final settlement. There's still a credit obligation between the two different financial institutions, but it works pretty well. So, and one of the sort of, so does stablecoins have a role place in replacing money? The issue with stablecoins, of course, is that they're fully reserved. And so, if everybody moves to stablecoins, you just remove the deposit base of banks, and then you remove the ability for banks to create credit in the same way that they do. So I think that, I'm not sure that this is why all the banks obviously want to issue tokenized deposits. Tokenized deposits have a bit of a marketing issue because they're fractionally reserved. So if somebody says, hey, you can have this thing that's fully backed, and the reserves are audited, and you can have a look at the smart contract, and you can see that the number of tokens issued is less than the amount of the deposit base that we have, the underpin it. Or you can have this thing that's only got 12% of the assets. Well, which one are you going to use? You're probably going to use the one that's fully funded. And so I think that there's still some question mark around like the extent to which stablecoins, as an example of a tokenized asset, integrate into the way that we conduct business. For cross-border trade settlement, it's perfect. For domestic, payments, I'm less convinced.
So when you're talking about tokenization, just because this topic is so spoken about in 2025, 2026, Chris, you just mentioned NASDAQ started trading 24/7. So do all assets really need to be tokenized now? I mean, you have TradFi already making things more accessible. That's one of the reasons why people are tokenizing assets. So I just wonder is right now we're talking about putting all assets on chain, but is that really a necessity?
Look, things work pretty well right now, which is why there hasn't been a ton of inertia. Because I think, look, 10 years ago, people were talking about tokenization, and people thought it was all going to happen a lot faster than it's happened, myself included. The problem is it's really a coordination issue, because you need the companies, the banks, the exchanges, the regulators, the CSDs, et cetera, all to kind of like get over the line at the same time. And so this is why it's been kind of slow progress, coupled with the fact that it kind of works, right? But, is it more efficient? Yeah, or do you remove all these unnecessary layers of complexity? 100%. So, like, I think that, and do you make, settlement and reconciliation a lot more efficient? Yeah, 100%. Again, so I think that, like, the inertia over time will take us there. But yeah, like I don't think is it something that we need to do tomorrow in order to save the fight? No, I think that operational efficiency and the desire to capture those efficiencies will drive us there over time.
And I think from a tokenization standpoint, the kind of key benefits, if we break it down, right? Like number one is liquidity. Number two is like freedom of choice, right? If I'm have my assets custody with a broker, I can easily pick them up. I can move them to wherever I want, right? And I kind of break it down in those two key premises. Now, I think one of the issues that we have with tokenization right now, because a huge believer, I remember when like the St. Regis and Aspen got tokenized in 2018, I believe it was, and I was like, yeah, this is awesome. And I thought we were just going to go on this like rock and roll tokenization of the world narrative, and cool, we're still on that journey, right? But I think one of the issues that the market is facing right now is that like a lot of people are spinning up new RWA platforms. You got a lot of new venues that people are basically doing the trading as well as the tokenization. And if you think about trading at its most basic level, like you need decentralized pools, right? Whether it's centralized or decentralized doesn't matter, but I need a source of liquidity. And there's too many platforms, right? And so you've kind of seen an aggregation of where flow goes from an exchange perspective in just like spot crypto as well as derivatives. Right now, I would say tokenization is kind of in that like 2015, 16, 17 stage where the crypto exchanges were. And you're going to go through and you're going to see the ones that capture the demand, and then you're going to see a consolidation phase. And I think like once you can actually bring liquidity, you can use these underlying assets as collateral. You get the functionality and use case of them. I think that's when people will start to see the real underlying benefit alongside the like safekeeping and freedom of choice to move your assets when you wish.
Yeah, 2017 St. Regis Aspen was one of the first use cases of back then what we used to call security token, now RWA. I think Stefan Debates built it on Tezos. I don't know, why he chose Tezos, which is why I was asking the question earlier, which chain wins? How do you decide what chain to build on? And his biggest struggle was getting the retail audience to come in to the space. People didn't know, where do I buy this fractionalized share of the St. Regis? Today, do you think that we could see exchanges like NASDAQ or platforms like Robinhood offer these type of assets? Or do you think it's going to come more from the crypto side, like Binance and Bybit? Which one do you think is going to offer assets like this?
I mean, in short, I'd say all of the above right now. You see the arms race right now with like, you've got Robinhood swimming down deep into the crypto world. You've got Coinbase excessively going after the equity world. You've got equities listed on Binance and OKX, and like everything is converging, right? And to me, that also means RWAs. And I think at the end of the day, like the most simple thing is like, where's the network effect, and then where's liquidity, right? And so people are going to choose, and I think like one awesome example recently is like the success of Hyperliquid, right? Came out of nowhere, stole all the DEX flow, continues to be very supportive in the industry. In addition, has garnered a lot of volume, continues to push the bounds of like what assets they're listing on there. And it also has quite a bit of like network effect and hype, right? It's cool to trade on Hyperliquid, and it has been, which it used to be, and it still kind of is. Like Binance also used to carry that in the 17s, 18s, 19s in the crypto space. So I'd kind of fast forward it to just say, I think everybody's going to try to be the one-stop shop, right? This includes the institutional side as well as the retail side. Everybody is going after all assets, including prediction markets. And the ones that aggregate the flow and have the liquidity are going to end up winning and then consolidating other platforms.
Moses, were you going to say something? Did you want to chime in on that?
I suppose taking it up from a more high level, why would you want to tokenize something? And from a crypto native looking back, there's been many experiments in tokenizing, and a lot of dead bodies are in the past. So tokenizing something doesn't mean success. You really have to understand why you're tokenizing something. And one of the things that are key is distribution channels. And then also the other thing that I kind of consider is tokenizing something gives you certain benefits. One is you could tokenize something to use it as a reserve asset. You could tokenize something to be a tradable asset. You can tokenize something for it to be a transactional instrument. So let's just take BlackRock's BUIDL for an example. So BlackRock BUIDL, Anchorage Digital uses BlackRock BUIDL to use it as a reserve asset for stablecoins, for example, USDTB. So that's great. But then you can also invest in BlackRock BUIDL as a investable asset, a money market fund. And then not too far in the future, you could potentially have two institutions just settle with BlackRock BUIDL as a transactional instrument. So those are kind of compelling reasons to tokenize something. You actually have some benefits. You have distribution and you have benefits. And that gives you an edge over, let's say, some database. So those are some of the higher level things I think about for success in the RWA tokenization space.
Awesome.
I think there's also another angle where the retail really is keen for some exposure as quick as possible, as straightforward as possible. So being able to trade from their web UI, where they buy and sell a token in like Tesla, for example, stocks tokenized in their own, I don't know, whatever DEX they want to trade in, that's quite attractive. And it skips a lot of steps for them to achieve if they wanted to do this in the normal ways and buy. Also, other part is that they can trade in more micro sizes. Right? That's another piece, which is actually the traditional finance instruments are also converted into the mini versions when the contract sizes are large, so that the retail participation can be done with the contract sizes. So similar to that is another use where it is all towards the ability to trade and exposure. And I can imagine, I don't know, a yield product to be not so interesting for a retail to participate, but that's more institutional. But retail is always there for exciting trading opportunities. So I totally see the entire stock market to be converted into tokenized with no hesitation.
Okay, great. Well, last question to close up the panel. What are you most excited about this year in 2026?
I'll kick it off. I think what I said earlier about the worlds are colliding, and so a lot of institutional and retail counterparties are basically building the bridges between crypto and digital assets. And after sitting in the space for a number of years, I find this is probably one of the most exciting things. How do you truly solve something like capital efficiency across asset classes? How do you bridge the two worlds to get more functionality and use cases out of it? And at the end of the day, I think we're very much on the journey and on our way right now to solving some of those things that people have been talking about for a long time. I think the next 2 years are primarily about how do we scale in massive size within the crypto space to service both retail and institutions alike. And I think it boils down to the ease of use. How easy is it to get into a position at midnight and when the stock market's closed? How do I fungibly use my assets as collateral? How do I get yield on an underlying asset and use BUIDL instead of using dollars and have less friction? And I think that's the space that the market's in right now, which I find to be quite exciting because we're moving past that early stage of like, hey, this is super cool, but it's crazy complicated, into people are basically building the layers on top of it to make it easy to use for everybody, which then breeds more adoption.
Chris, Moses, Erkan, in one word, what are you most excited about for 2026?
In a word, probably tokenization.
Stablecoins for cross-border trade settlement. This is going to be huge.
That's too many words.
I get a pass because someone made fun of me with a Moses part the ocean joke for an introduction.
Yes, I'm very excited about tokenization and the derivative products that builds on top of the tokenizations.
Amazing. Well, thank you so much. Thank you, everybody.